And I guess what for people, for people that want to get insurance, right? Like, what do you find? What are some lessons that people should know about? Like, what are things that people should know when picking a plan, or like, because like you're talking about like how much people are paying over time. It's like getting more and more expensive. Like, what tips and what things do you think would be good for businesses should have when either picking one or staying with one, or what do you think about that?
Yeah, so I'm going to tie in the brokerage community here in just a second. So I've got a glass wall behind me. I'm going to throw stones inside of a glass house, if you will. But just as an insider to the industry, this is what I see happening, and I'll answer your question.
Yeah.
So when companies, maybe a CFO or CEO or an HR leader listening to this right now, and they're going to meet with their broker to look at the plan options that they've got. They're relying on that advisor to bring them the plans and help them make a good decision for their company. But it's important to understand how the brokerages get paid. And so historically, it's just since the inception of the insurance industry, brokers get paid a percentage of the premium that the company pays to the insurance company. It's a commission. And so the industry average nationally right now is about 5%. So if you're a broker and you're getting paid 5%, it's almost like a realtor. Do you want the price of the house to be higher or lower? And so there's not as much incentive for brokers to go out and solve the actual problem. Right. So they're paid a commission, and we often trust and rely on those brokers to have our best interests at heart and make sure that we're seeing the entire options that are available in the market. The second component of that is these big insurance companies will pay very large bonuses to brokers to keep them in the system that they're in. So if you're listening to this and you have a fully insured plan, that's the most popular type of plan for small and mid-sized employers. It pays the highest commission, but it also pays the highest bonus. So when you look at the big national brokers, if you just pull a list of the top 25, they're all private equity or publicly traded, owned. They're either public or private equity backed. And so they're looking at how to maximize return for their shareholders, just like the insurance company. And some of these bonuses that the insurance companies will pay to these brokerages is they're very large 8-figure bonuses.
Right.
So you're talking tens of millions of dollars. They're not going to cannibalize.
Right.
So the goal for a lot of these brokers is, how do we maximize our return? How do we keep it simple to execute for us as the brokers? They continue perpetuating the talking points of, this is the best option. This is what most small and mid-sized employers do. These are the only options you have. It just kind of is what it is. So to answer your question specifically, what should employers be looking at? One is, you should be seeing options outside of the traditional market today. So when I say traditional market, you're looking at Blue Cross, Anthem, United Health, Cigna, and Aetna. You should be seeing there's a convergence or a kind of this building, if you will, of carriers to compete with those traditional insurance companies. And the biggest wave, what we're seeing today, is self-insuring or partially self-insuring health benefits for smaller employers. So there are companies out there that specialize in that have removed a lot of the risk. And the reason why that's important is when you're buying insurance from a traditional fully insured plan, you're only going to get a handful of options. And it's like buying a car off the lot. When you go to the dealership, what cars are on the lot today, that's what you have to pick from. But when you partially self-fund a plan, so you're now saying, I'm going to take a little bit more control over what's involved in my health insurance. A good advisor will do it all for you, and they pick the right vendors, and allows you to custom build a plan to cover what you want. But most importantly, if you do it right, you ensure that you're not overpaying for your employees' healthcare. You're giving them the exact same thing, access to the same providers, the same medications, but you're just making sure you're paying the right price for that stuff.
Right.
Because when you pay the right price, you don't overpay. We don't have to overcharge for the insurance. Right. And over time, it adds up to millions of dollars for small employers back in their pockets, which in turn allows them to reduce the cost of health insurance in their business, provide free health care to their employees, enhance the benefits. I mean, there's a lot of money at stake here.
Right. Do you find, I hope I don't get canceled for this, do you find that a lot of these companies are very transparent with their prices and their margins and all that stuff, do you think?
No, they're absolutely not. Not the traditional insurance companies. They're not transparent at all. Most of the companies won't even share basic level claims detail. So think about this, Josh. You run a business. If somebody was going to go spend $1 million of your dollars, you cut a check to them. What's a basic question you'd ask? Can you show me where you spent it? What did you buy?
Right.
And oftentimes when you ask the insurance companies that, they don't want to share it. And which is why in Texas, in my home state, our state legislature had to pass a law which forces the insurance companies to give us very basic claims information, but it's not detailed. They don't want to share it. They claim that it's privileged and proprietary and we can't share that information. But if I'm a business leader and I'm trying to ensure that we're getting what we're paying for, we're good stewards of our money, I want to know what somebody's paying for, what they're buying. Are they going out and buying a $2 million Bugatti? Or are we buying 4 Pintos? I mean, what are we buying for this?
Right.
And oftentimes I meet with executives, and they can tell me how much they pay for printing booklets. Our printing cost is 5 cents a sheet. We've reduced it 20%. Well, that's great. You spent $120,000 on printing costs last year, but you spent $10 million in health insurance. How are you managing that? And so we're now talking about, and when you think about the average employer, it's usually the second or third most expensive thing that they buy every year. And they're required by law now to buy it. So if you're a service business, meaning you don't manufacture or produce a good, it's usually your second most expensive line item on your P&L behind payroll. And if you manufacture something, so you're building houses or cars or widgets, it's usually third on your P&L as largest expense behind the cost of the materials, labor, and then health insurance. So the reason why we highlight that with our clients is there's a lot of leverage there. If you can save 10, 20, 30% in health insurance, you're now getting people always ask, is the juice worth the squeeze? If I can add $1 million back to your bottom line, what does that do for the value of your company? But more importantly, over time, what does that do for your employees? How does it make you more competitive in this tight labor market? Everybody's fighting for talent. Usually the mid-sized employers, they're fighting against Fortune 500 companies for talent. So if you can solve this one issue, not only can you make your business more profitable, help your employees, you can use it as a recruitment and retention tool.
Yeah. No, it's very interesting that you mentioned that. I really like the fact you're educating, especially here for business owners, because I think a lot of people get confused on what to actually do and what the right thing is to do. And I find where you pay for more than actually what you get. Like you don't get as much as what you think you get. I think it's sort of, I don't know what the word is. I wouldn't say, maybe it might be the word sleazy. Like it's sort of like you kind of are paying this and they kind of tell you what the ideas or the concept of what you might get, but it's actually not really in writing or not really sort of there in terms of what's actually on an insurance plan.
Yeah. I mean, think about frustration and friction. It's when expectation doesn't meet reality.